Hello everyone, I'm Riley Milne, SVP of Marketing here at Corum, and welcome to our Sellers Panel. We're happy to have back on several luminaries to start this year off with their insights. We're joined today by Eugene Ware, Director at GoDaddy, and Lee Travena, Senior Director at Lease. Thank you everyone for joining us today. Let's get straight into it. Why did you go through the M&A process? Was there a motivation? Let's start with you, Eugene.
There's a saying in business that you should never start a business unless you have a plan to sell it one day. Our business had been doing very well and had been experiencing significant growth. In 2020, COVID-19 happened. We were worried about what the effect might be on the market for tech companies. So we reached out to Corum to ask their opinion, even though we thought we were not quite ready. The advice we received at the time was that there was a little softening of the market off the back of record valuations. While it was impossible to predict, there was the risk that if we waited too long and this trend continued, that we might receive much lower multiples if we were to sell in the future. Of course, many tech companies, including ours, did very well in the pandemic, but early on there was a lot of uncertainty. For us, it was partially about risk management. We wouldn't want to look back on this period and regret that we hadn't taken action and we got a much lower price for our business by waiting. We also went into the process with the mindset that we might be unlikely that we would sell due to the maturity of the business and the market, but that we would at least learn specifically what we needed to work on to plug these gaps and to be in a stronger position to sell the business in the future. In addition, we also had already seen many large, more well-financed competitors enter our market. We were a self-funded company, and part of our decision to engage in the M&A process was to find a safe home for our product and people with a large, more well-financed buyer to enable us to compete more effectively.
Thanks, Eugene. How about you, Lee?
Actually, it began when I was looking for a new shareholder to achieve the next phase of the company's growth into international markets. It was the ultimate objective of what had been a highly successful 5-year business strategy. With some long-term shareholders that I had, there was growing agitation to realise a return. And after nearly 20 years of myself being completely consumed, the idea of selling out completely had some appeal, but I still didn't know if we could achieve a valuation to make it worth it. I felt like I wanted to do another 5 big years to further expand internationally, and so had planned for a majority recap to bring in a larger, more committed shareholder as my best outcome. As it turned out, the better offer came from a strategic to acquire the entire company. And so then I had to reconcile with myself whether that was something I would entertain or not.
Moving on to the next question. What surprised you the most about the M&A process? Any mistakes made along the way? We'll start with Lee this time.
The investment of time required was often more intense than I had imagined. I thought we were ready, and we still had a lot more to do, especially when buyers' timeline expectations can be so intense. You don't want to be seen as slow or unprepared in the eyes of a buyer. Often they are looking at multiple deals at once, and so like anything, the easier things are for them, the better. Buyers are also often making initial decisions without much information, and often based on the type of business or a particular industry space. So you're rarely going to appeal to everyone. Even just 2 interested parties can get a great deal done.
Thanks, Lee. What about you, Eugene?
The biggest surprise for us was that there were many interested buyers. We went into the process not really understanding what the market for artificial intelligence-powered video creation was and who would be interested. But we were really delighted to find that there were many of the top, large tech companies were interested in having a conversation with us about our product and business. It was very exciting to have several meetings every week with top tech companies and potential acquirers from a large range of different industries. I really didn't have too much time to process it at the time, but it was a very surreal, exciting, and genuinely fun process. The other surprise was how many large tech companies were very open to working with a small company in Melbourne, Australia. I had often thought that being based out of Australia was a liability compared to moving to Silicon Valley or another tech hub, but that really hasn't been the case at all.
What advice do you have for tech CEOs considering M&A? We'll go to Eugene first.
We decided that we needed to understand this world a lot more and understand what the market for business acquirers wanted. So for 3 years prior to 2020, we had been coming along to many of Corum's information sessions in Melbourne and attending the webinars to immerse ourselves in this world and to learn. For example, from the information sessions, we learned that artificial intelligence was an important part of what buyers were looking for. As a result, we made it a strategic imperative to double down on machine learning and to grow that capability in our business and product. It proved to be one of the most valuable parts of our business and made us very attractive to many potential buyers. So I think that's a really great place to start. You might think that you're not ready for a sale process like us, but it's definitely worth having a more serious discussion with Corum because you might be wrong or you might miss out on the current market cycle.
Thanks, Eugene. Now to you, Lee.
The level of detail and information required through the pitching process and then due diligence can be overwhelming. It's also possible that as a founder, you are going to know less than anyone else involved in the deal, the buyer, the broker, or lawyers. When you are deep in the trenches negotiating your exit, you absolutely need advisors who have been there before and know what to expect and how to get the best outcome. Pay for the best advisors you can, ones that truly have live deal experience. Remember, you aren't dealing in hours, you are dealing in value. I'd never sold a company before, and after many years of building a relationship with Corum, I was able to see firsthand how millions in extra value can be created with the right knowledge and process.
What does life look like now after the deal? Lee, we'll start with you.
Ultimately, I sold out completely and am now a senior executive in the acquirer and still bedding things down. There are now literally 4 or 5 people for every role we previously had, which has been a lot of knowledge transfer, but ultimately giving me back my life. After a short time, I realised how much longer and harder it was going to be to get my company to the next level on my own. And so now I'm very glad that I've sold down.
Thanks, Lee. Now, Eugene.
So I'm now a director of machine learning and engineering at GoDaddy. It's a very global business. The corporate function is in the US, and the product team that I work with is based out of South Africa. And I also manage several teams in Australia. So my work involves collaborating with super smart people from across the world in areas of machine learning, data science, and also growing our capabilities in video for our social media creation app, GoDaddy Studio. It's exciting to see both our team and the IP that we've built in our Vietnamese product find a new home in a company that has millions of customers where we can truly have a global impact. I'm currently leading a team of people to apply cutting-edge machine learning to GoDaddy Studio, which for me is very exciting and personally fulfilling. I get to work in the exciting areas of computer vision, natural language processing, and automated design. I can't think of too many places in the world where I get to do that kind of work at scale every single day. On a personal note, the sale has enabled my wife to stop working, which has been a significant goal of ours for a long time, and I've never seen her happier. It definitely has been a change moving from a small startup to a large company, and it hasn't come without a share of challenges, but every day I'm genuinely grateful about the outcome of the sale, what it's meant for me and my family, and that I get to do really exciting work every single day.
Great insights, everyone. Thanks again for being on with us today. We're looking forward to working with you in the new year.